Hey, this is Matt from InvestiQuant. Today is Thursday, July 16th, 2020. And this morning we saw the markets gap down in the prior day range, and we've had a fairly quiet session all day. In fact, we just have 16 points of range in the daily session right now in the ES, which is quite a bit lower than what we've been used to. But what we saw this morning was a gap down, a small test lower, and we have basically been consolidating all afternoon and are starting to creep back up towards the highs. We have not filled the gap anywhere. That's what the cyan dashed colored line is. And we are trading near the highs of the session. So what we're going to do in this video is take a look at what has happened historically when you gap down in the prior day range and you're trading in the top 25% of the range, but you have not filled the gap going into the close. And we'll put that in a bullish environment just so it's a little bit more similar to what we're in right now. So let me set that up here. We will use all four instruments. The entry time is going to be 3 p.m. Eastern time. It'll be set up as a long exiting at 4:15 p.m. Eastern time. The opening filter we're going to use is gapping down within the prior day range. And then I'm going to go on the post-open filters and build out this price action that we've seen where the market has not filled its gap, but it's trading in the top quartile of its range. So right now we're trading up near the highs. I can select the close of the 3 p.m. price is in the top 25% of the daily range there. And then I can go to indicators and add above a 10 and above a 200-day moving average just to keep it in a similar bullish environment. Then click View Results. And here we go. So these are the results of what has happened historically when entering long at 3 p.m. Eastern time, exiting at the close 4:15 p.m. Eastern time on a day that gaps down within the prior day range. It has not filled its gap as of 3 p.m. Eastern time, but it's trading in the top 25% of its intraday range when above a 10 and a 200-day moving average. Historically, that has happened 44 times in the ES. We've got 25 samples in the NASDAQ, 36 in the YM, 20 in the Russell, so not a real common pattern, but it has happened a handful of times in each. And looking at the win rates here, ES coming in about 61%. NASDAQ looks like it's the weakest here, 52%. YM closer to that ES number, 61%. And Russell just a bit better than 50-50 at this 55% historical win rate for closing above that 3 p.m. price. So not strong consensus. We're not seeing all four instruments up in the 60s. We're just seeing two of the four that are kind of bullish. So historically, just a slight lean to the upside. Let me take a look here at the average win, average loss. I always like to keep an eye on that. And it looks like ES, a little bit larger average win than loss. That is not the case in the NASDAQ. So the NASDAQ, not only is it the weakest win rate, which is just a neutral win rate, the average loss quite a bit larger than the average win when that has happened. YM pretty neutral on average win, average loss. Those are about the same, as is Russell. They're both pretty close. Not the strongest pattern we've seen, but as a whole, it's a little bit better than 50-50. So hopefully you found that interesting. Good luck today, and we will see you tomorrow for options expiration.